Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited. Let me say that, first of all, that I'm here with you this morning as we are going to be taking another fresh new look at the financial market. It's a very, very sunny morning out here, and in fact, it's quite a beautiful one. And trust you are all doing well over there as well. The last 24 hours has been quite interesting as the market is currently buzzing with a lot of fundamental factors and in fact geopolitical tensions and economic situations that has been affecting the market in the last 24 to 36 hours, giving us a situation where majority are not even sure where price is likely going to be heading to for this week. Now, yesterday we witnessed the a very notable volatility in the market, which was driven by the UK employment data and of course the US inflation report, which actually came in beyond expectations. So we had an inflationary pressure of about 0.1% as against the previous month, which was at break even. So at this point now, we are now in a limbo where market participants are not sure if the interest rate decision will be just as expected, or we might likely be seeing another rate hike for today's economic event. So with all these factors in place, things are looking a little bit dicey, but thank goodness as technical traders, we have no other business than to look out for patterns and structures that we can use to guide our trading decisions for today's London and New York session. Now, for those of you who have been with me on both my TradingView and Telegram platform, you must have gotten an hint into how we intend to position ourselves for today. So we are going to be deliberating on this one during the, and of course expatiating on this one during the live session today. Now, since the beginning of the week, we have been monitoring three major financial assets, which includes the US All-Spot, which has done phenomenally well, at least in the last 24 hours, making us scoop over 550 pips in that regard. And if you remember vividly, at the beginning of the week, it wasn't that good for us as we had a couple of losses. Then we also have the GBPUSD on our watch list for this week, which hasn't been doing very well at all. We are going to be looking at how we will be positioning ourselves for today's trading session. Then finally, we have the XAUUSD, which is of course my favorite asset. And on the XAUUSD, we also have mixed development going on there, though we are on the positive side of our portfolio on that particular asset. But today we will be seeing how we intend to position ourselves for the next move. So I encourage you to stay tuned in, grab a bottle of water or a cup of tea or whatever it is, and let's get to the business. Now, for those of us who are joining us for the first time, you are highly welcome on board, and I'm always very excited to have you around with us. Now, I know you will be wondering what this is all about, or what is it that we really do during the Forex Morning Mastery. Now, to simply put, I usually share a couple of weekend videos on my channels where I get myself prepared for the new week, and as a follow-up detail to this video, the Forex Morning Mastery was born, where we all as technical traders come together here every day as a community and engage in follow-ups and reviews of our current position, especially if we have existing position, see how we manage ourselves, and at the same time strategically position ourselves ahead of both the London and the New York session. These sessions usually kickstart about 9:05 a.m. West African time, 8:05 a.m. UTC, and I recommend and encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be talking about today. Now, my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you get to comprehend our analytical approach and eventually be able to utilize the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and I encourage you to engage in the comment section below. So with that being said, here we will be diving right into the business. And for today, the first thing we usually do is to, of course, check on the economic calendar. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, for today, Wednesday, December 13th, we have a handful of high impactful events coming in from both the United States and the United Kingdom economic docket. Now, for today, there is none here as regards to impactful event from the United Kingdom, but if we include the medium impactful event, we begin to see some economic factors that will serve as a driver for the pound sterling today. So let me just include that quickly and let's apply the filter and let's see what we have here. All right, so here we go. So for today, Wednesday, December 13th, we already have a barrage of economic events from the United Kingdom, which has already happened. It happened about an hour ago. And the first one here is the gross domestic product annualized for, gross domestic product for the month-on-month, which is usually released by the National Statistics on of the United Kingdom. Now, this is a measure of the total value of all goods and services produced in the United Kingdom during the space of the month of October. Now, if you look at what the data is saying here compared to the previous month and, of course, the market expectation, you will see that the figures are not doing very, very well at all. Now, for instance, for the month of September, we had an expansion of 0.2% in the United Kingdom. And in fact, economists were expecting a contraction of about a deficit of 0.1%. But if you look at the actual data here, it came in at a deficit of 0.3%, giving us a negative deviation of deficit of 0.88, which is not something promising at all for the United Kingdom. Then if we look at the industrial and manufacturing sector of the United Kingdom as well, you will see that the data also came in below expectation and in fact even below the previous month, which shows that there has been some contraction in that sector as well. And if you look at the way the market has reacted to this on the chart, you will see that things are not really looking rosy for the pound sterling at this particular point in time. So we are going to be taking a dissection of that chart to see how we intend to position ourselves for today's trading session. Then later on today, we are looking at the producer price index from the United States economic docket. Now, for those of us who do not know what this is all about, well, the producer price index is also released by the Bureau of Labor Statistics, that is Department of Labor, and it measures the average changes in prices in primary markets of the US by producers' commodities in all states of processing. Now, generally speaking, a high reading is considered as positive, while a low reading is considered as negative. Now, if we look at the month on month and year on year, and of course the excluding food and energy, you will see that the expectations from economists is a little bit on the positive side. Now, if we compare that to the previous month, we will see that okay, let's take for instance the month on month here. We can see minus 0.5% contraction there for the previous month, and economists are projecting there's going to be an expansion of 0.1%. So this is also an inflationary index that will help the Federal Reserve to decide if it is likely going to maintain interest rate or probably increase interest rate. So things are looking positive for the United States at this particular point in time, but we shall be waiting for the actual data to come in. Then much more later in the day, we will be looking forward to the all important and most anticipated event for this week, which is the Fed's interest rate decision. Now, during the first interest rate decision event, we are going to be it's going to give us an outcome of the Federal Reserve's meeting where they decide whether to change or to maintain the current interest rate. Now, this decision has a significant impact on market sentiment as it reflects the central bank's assessment of the economic conditions of the United States, and any changes can influence the borrowing costs, investments, and of course overall economic activity. So everyone is looking forward to, from both the oil market, so the gold market, to the safe haven market, metal market, and of course the commodity market. They will be looking forward to what this data is going to be like. Will it be just as expected at 5.5%, or are we going to be seeing a rate hike as a result of the recent development, especially yesterday when we saw the CPI data coming in a little bit beyond expectations? Now, later on today, we are going to be listening to the Fed Chairman Jerome Powell during the FOMC press conference, an event where the Federal Reserve Chairman will communicate the central bank's monetary policy decisions, economic outlook, and of course answer questions from the media. Now, its impact on the market sentiment is substantial as investors will closely analyze the statements to have an insight into future interest rate changes and of course overall economic conditions. So this is one other event that majority in the market will be looking forward to. And as a result of these highly anticipated events for today, we do know that as technical traders, we do know that the anticipation of this event usually affect the market sentiment and will dovetail to movement in price action, which is what we will be studying during this session today. So I hope that you stay tuned in so you don't miss out on these insightful ideas we will be talking about this morning. So with that being said, we will be diving right into the business. Hold on a second, please. So with that being said here, okay, I can see a couple of comments here in the comment section. Hello, Torres Master. I always like your morning narrative to boost our momentum ahead of the week. Thank you very much, Torres Master. And trust you had a wonderful day out there too. Hello, Kelechi. How are you doing this morning? Trust you are doing very, very well. Glad to have you around with us too as well. Ronald Kalnin, good morning to you, Ronald. Glad to have you around with us this morning too as well. So with that being said here, we will be diving into the first asset on our watch list, which of course is going to be the USOILSPOT. And in fact, on the USOILSPOT, the last 24 hours has been quite tremendous for us as we were able to scoop in a minimum of 550 pips on two positions for me at least, and some of us could probably have had multiple entries on that one. So we are very profitable on this asset. And if you remember vividly, at the beginning of the week, we were not really doing very well at all. Now, if you look at the structure here, at the beginning of the week, we indeed identified a range where price action was initially confined, and that was between the $72 level and the $71.30 area, before price action now expanded the range into the $71 area. Remember, and in fact, we had a couple of entries at the beginning of the week. We had a sell position initially, two sell positions actually, but moved over 80 pips. We had over 100 pips move before the bullish momentum came in, and we had a couple of more sell positions again triggered with the hopes that price action will go to the downside, but all attempts around that area failed. Then during the live session yesterday, I did mention that I had a buy position triggered. Remember that we did place a buy stop order above the $72 area with the hope and intention that price action will continue to find new highs. And with a buy stop order above that structure, we also had a buy position triggered, which unfortunately also went into a loss, breaking down the $71.38 level, which we did say yesterday that a breakdown retest of the structure would be all we need to capitalize on a downtrend move. And we also emphasize how that level also shares a beautiful confluence with that ascending trend line that was supporting that bullish momentum since last week, Wednesday. So it was a very beautiful sweet spot for us to capitalize on the bearish move. And as a result of that, we joined the momentum to the downside. In fact, adding one more position at the breakdown of the $71 level as projected during our live session yesterday. So in that regard, we were able to recoup the loss we incurred at the beginning of the week, and of course made a significant amount of profit on top of it. So well done to everyone who had capitalized on this opportunity. And as it is right now, price action appears to be at a critical juncture, almost close to the $68 area, as we begin to notice that since the later part of the New York session yesterday, price action has been going through a consolidation phase at this point in time, which probably is a reflection of the anticipation of the Fed interest rate decision coming up today. Remember, this asset is a US denominated asset, and of course, whatever happens today will be having a significant impact on this asset. So at this juncture, I did mention this morning on my commentary on both my TradingView and Telegram platform that we do want to be moving our stop losses accordingly to protect all positions right now, as anything could happen probably some couple of hours into the Fed interest rate decision due to some little information seeping out of the FOMC corridors. So at this point in time, I will be suggesting that anywhere around the $69 area seems most appropriate to lock in all profits at this point in time. Move your stop losses to anywhere within that range. And remember that while you are moving your stop losses, we do want to give enough breathing space for price action to move around, just in case it wants to do some retracement in anticipation of the downtrend continuation. So we will still be in the trade and be able to maximize that move to the downside. So with a well secured position at this juncture, what is going to be our next line of action for today? Well, there are a couple of, in fact, there are a lot of economic features and geopolitical tensions that are likely going to be affecting this asset, and I did mention them during my commentary this morning. And first of all, we had about the supply estimate by the EIA, that is the Energy Information Administration, which yesterday said they are adjusting their 2023 supply estimate by 300,000 barrels per day to 12.93 million barrels, indicating a changing outlook for the US oil production, which for me is adding to the complexity of this particular market. And of course, this adjustment adds a new dimension to the market dynamics, particularly as the OPEC Plus output cut agreement encounters difficulties in managing supply. So this for me is a sign that there is a huge supply of this demand in the market, and if there is a huge supply of demand in the market, definitely price will be crashing to the downside. Now, furthermore, the geopolitical tensions in the Middle East is also contributing to this market uncertainty, as we had some attacks going on the Red Sea by the Yemen Houthis terrorist group, who have been protesting the attacks by the Israelis on the Palestinians in recent times by attacking vessels. And of course, these attacks on this vessel could also disrupt supply of oil from this region. We do know that this area is where most of the oil supply for the world is coming from. And if this is going to be affected and people begin to feel uncomfortable passing the Red Sea, we might likely be seeing a decline in supply. So we are actually in a limbo right now, where both factors could either support supply for the US oil, the increased supply for the US oil, and the other one, which is may likely disrupt the supply. So we really don't know what is going to be happening. And in the midst of this uncertainty, investors are not really feeling comfortable holding assets in the US oil, resulting in this crash to the downside. Now, the question at this point in time is how market participants will be anticipating the Fed interest rate decision coming up later today. Now, let's look at things from a technical standpoint and see how we will intend to position ourselves for the next move. Now, looking at the current chart right now, you will see that I did identify a level this morning around the $68.50 level. And in fact, if you look at this level here since the later part of the New York session stroke the Asian session, you will see how it had played a major role in determining the direction of price action. Now, following the strong bearish momentum to the downside yesterday, we saw some continued buy pressure resume around this area for some time. This led into the Asian session as we saw buy pressure persist around that area before finally during the UK session we now saw price break down that structure with an engulfing bearish candle. And this for me could be a sign that price may likely continue the trend to the downside. But in as much as this is a possibility from a technical standpoint, we cannot ignore the factors behind the scenes that is driving the market sentiment. Now, at this point in time, we are at a limbo. We are very in an indecisive phase right now, where we need to exercise patience and wait for significant confirmation before we either join a buy or sell opportunity. And why have I said so? Now, with the way things are going right now, considering the impulsive leg that brought us into this point, we may likely see a situation where price could transition into a reversal pattern, maybe a head and shoulder pattern, an inverse one to be precise, to lead into the breakout retest of that structure of the neckline of that structure to incite a reversal setup, maybe back into retesting that zone that was broken yesterday around the $71.38 level and the $71 area, or in fact come back to retest the ascending trend line that was broken yesterday. And in fact, that will be that will dovetail to, let's see how many pips that will be. That will be a minimum of, let's say, about 200 pips to a maximum of about 300 plus pips to catch there. And in fact, this will be a move we do want to be on standby to capitalize on. So I'm not saying that is going to be the case right now. We are just projecting the possibilities that could happen around this area, considering the sensitivity of the situation surrounding the US oil spot. Then another thing that could happen here is if selling pressure persists below the $68.50 level, that is if buyers are finding it difficult to break through the $68.50 level and continue selling pressure persists there, it could lead into a downtrend continuation. So let's see how the market will play out in the next couple of hours, and then I will definitely be with you in the comment section of both my TradingView and Telegram platforms to give you updates. Then another thing I just spotted here, which we would like to take into consideration now, is the trend line. So you know how the trend line usually help us in positioning ourselves for the next move, and of course makes us also feel comfortable in whatever positions we are in. Now, with the situation we have right now, as long as price remains below the descending trend line, we will feel comfortable in a sell position. As you will see, price action had consistently respected this trend line since the later part of the New York session, giving us this series of lower highs here to give us that trend line. So if price action comes back to retest the $68.50 level, continue selling pressure here will be a good opportunity for us to join the decline to the downside. However, if price action transitions into what I mentioned earlier, that is a reversal pattern in such a way that it comes back like this, like I showed us earlier, something like this, and it comes back to break out of the trend line, a retest of structure of the trend line would be a beautiful opportunity to join an uptrend, and in fact it could transition into a reversal pattern, maybe in the form of a inverse head and shoulder pattern. So this is what we are going to be looking at. We're at a very crucial juncture, considering the sensitive development behind the scenes that is driving the market sentiment. So let's secure our current sell position at this juncture, and let's continue to monitor how price action will react to the structure. And by the next couple of hours, we should be able to find an headway on how we will be positioning ourselves for today's trading session. And trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple perspective on the US oil spot for today. I do hope I made myself clear, but if you feel that I need to clarify myself in a particular aspect, or there's an area you're finding it challenging to comprehend, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. All right, I see your comment. Good morning, my namesake, Sheriff Abdul Kadir. Good morning to you. Glad to have you around with us this morning. So, in the absence of no questions, I want to assume that we are all on the same page here, and I do hope you've marked out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So, with that being said, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the cable market, known as the GBPUSD, of course, and currently we have a sell position triggered. In fact, the market was so volatile yesterday. We saw a couple of takeouts from our buy positions. Remember, we had some buy positions yesterday, which some of them went into a loss actually, and some were even taken out with some small profit or at a worst case scenario break even. So it was more of a volatile movement of price action yesterday. However, if you remember vividly, we did say that if price action at any point in time breaks down the ascending trend line that we spotted here, for those who had watched my video, my weekend video on the GBPUSD, you will be familiar with this ascending trend line, and we talked about how this ascending trend line had played a major role in guiding the bullish momentum in recent times. And when we said here that if this ascending trend line at any point in time gets breached or broken to the downside, we may likely be seeing an opportunity to sell. And to further help us to capitalize on selling opportunities if it happens, we added this level at the 1.25500 area, which happens to be a strong psychological level considering the round figure of that price, to help us guide our selling decisions in this particular market. And of course, we did saw price breakdown, in fact came back to retest the structure, though during the Asian session price was more in a loosened side before it finally gained that the dollar gained the traction back again to come back below the ascending trend line. So at this point we are in a sell position, but the profit isn't that significant at this point. Let me see how many pips that is. From the first sell position, we have about 25 pips running in profit right now, while the second position is running with about 6 to 5 pips at this point in time. Though it's not really cast in stone that we are going to be going bearish all the way to the downside right now. It's still very, very indecisive at this particular point in time. So for me, I will just advise that things might still go to the upside. Is still a possibility around this area. So let's keep our fingers crossed and let's continue to watch the situation as the price navigates through this current structure. Now, the market outlook on this is still. Remember, we were looking forward to some events this morning that happened, and they were not doing very, very well from the United Kingdom. That is, we had the gross domestic product for the month. We had the industrial production for the month of October, and of course for the manufacturing sector as well, which is not doing very, very well at all. Now tomorrow, Thursday, we are looking forward to the Bank of England's interest rate decision, which is supposed to. Everyone is expecting that the interest rate will be maintained at the level that it is right now, that is 5.25%, which is sounding a little bit hawkish for the market participant. And you will be wondering, why is that sounding hawkish? Well, at this point in time, any interest rate hike at this point in time is really going to be affecting the businesses, especially the one-man businesses in the United Kingdom. And of course, remember that the credit facilities are very, very expensive right now, hereby inhibiting business owners to go to banks to borrow money from the banks. And of course, when this happens, it usually affects, and then it also results in layoffs too as well. And you can see what happened during the labor event from the United Kingdom last week. Things were not looking rosy at all. So if they maintain interest rate, it could be a little bit of sigh of relief for the economy, and this could probably bring in investors to come and place their bet on the pound sterling. So in that regard, the potential of the uptrend is still very much intact at this point, based on these fundamental factors we just talked about. Now, let's look at things from a technical standpoint. What is really going on in this market, and how do we think the market participant will be anticipating the PPI data today from the United States, and of course the Fed interest rate decision, which will now be culminated by the first chairman speech later in the day. Now, to have a clearer perspective into this one, I would need us to look at the higher time frame together here to see what is really going on from an holistic perspective. Now, if you look at the 4 hours time frame, which I did analyze on my weekend videos, I did talk about the fact that since the later part of the month of October, price action has been on a very strong bullish momentum, and as a result of that, we have a couple of ascending trend lines to buttress the strength of the buyers in this particular market. In fact, I have a couple of them. I have the major one right here, but the first one here is where price action has been trading since the beginning of the week. Now, if we zoom into what has been going on around this ascending trend line since the beginning of the week, you will see that a lot of buy pressure has been happening here, where we saw how sellers have been struggling to even break down that structure. Look at what has been going on since the beginning of this week. Then we saw that huge bearish momentum yesterday, and despite that, price still find it difficult to break through. Not until this morning that it appears that we have a breakdown of the structure. Please note that word there. It appears that we have a breakdown of the structure, and the reason why I have used that word is simply because of the fact that this candle still has about an hour 7 minutes for it to close, so it could still turn out to be an hammer candle, which could emphasize the presence of the buyers at this point in time. So this candle is yet to close. So that is why I said that the bullish momentum is still very possible in this particular market. Now, if price action even breaks down this trend line and goes to the downside, remember that we still have the major ascending trend line here, which could serve as a bus stop for price action to move again to the upside. So it's still a possibility that buyers could still gain some momentum at this point. The only condition that will make us feel really comfortable that sellers are going to be dictating the pace going forward is if this ascending trend line, this major one, is broken to the downside. Now look at how the ascending trend line here shares a beautiful confluence with our key level for this week, which is situated at the 1.2500 area. And in fact, if you look at this key level since the mid-month of November, you will see how this level had played a major role in pushing price to the upside. Look at buy pressure here, and in fact, a couple of weeks ago, we saw buy pressure here. And yesterday, price was unable to even get close as we saw another sharp rejection of that area. So everything is still looking very possible for buyers to take over the market any point in time. But in as much as we have this in mind, we cannot ignore that sellers could still break down the structure to push price to the downside. So with all this information here, we now have a better perspective into what is going on. So I needed us to see what is going on the 4 hours time frame, so that when we start discussing on the 1 hour time frame, we will all be on the same page there. Now, scaling back down into the 1 hour time frame, now you begin to understand the dynamics of this market. While we are in a sell position, we keep all our options open for the potentials that buyers could still come into this market. Now, like I said earlier, the only condition that will make me really feel comfortable in a sell position here is if this 1.25 level is broken to the downside. In fact, a breakdown retest of the 1.25 area is simply going to is likely, let me not be too emphatic here, is likely going to be a strong bearish momentum to the downside. So let's keep our mind open. Let's keep our options as open as possible, and let's see how this is going to play out here. So as long as price remains below the ascending trend line, we hold on to this bearish bias and continue to look out for more selling opportunities at the breakdown of the 1.25 area. Now, with that being said, and like I did mention on the higher time frame, that we will not ignore the potentials that buyers could come in this market. Now, if you go to, let's say, as far back as Friday's trading session, you would see at this point that we had some buy pressure around this area at some point, as you will see. Then look at what, fast forward to Tuesday's trading session, we saw some buy pressure around this area. Now, price action is back into that structure. And as soon as it got into that area around the 1.25250, 1.25200 area, we begin to notice some buy pressure resume around that area. Now, what does this tell us? It simply tells us that buyers are still very present in this market, as majority are still holding on to their position, let me say accumulating their positions, with the hopes that let's see if the Fed interest rate decision will come in just as expected. And if it comes in just as expected, there is a likelihood that buyers may take over this market at any point in time. Now, with this in mind and with this perspective in mind, I want to keep the options of buying very, very open. Now, to buy here, let me first of all talk about where I will feel comfortable at to buy the GBPUSD. Now, I will need price action to break out of this range between the 1.26 and the 1.259. And the question is why? Well, if you look at this, you will see how this area had been a strong selling niche since last week, Thursday. Every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers. Now, look at what happened here again on Monday. Despite the strong bullish momentum, which we of course took advantage of, we saw how the momentum failed as soon as price got into that 1.259 area. Now, yesterday, despite the volatile movement of price action as a result of the CPI data, we saw again another sharp rejection of this range, again giving us a shooting star candle to further emphasize the strength of the sellers around that area. Now, for me, if I do want to feel very, very comfortable buying here, I would need price action to take out the zone and, if possible, retest of structure to feel comfortable in a buy position. Now, that does not mean that we cannot capitalize on any buying opportunity even before that level is broken. Now, if we begin to notice the resumption of buy pressure around this area, just like we've seen here, if sellers are unable to break through the structure and we begin to see something like a series of higher highs and higher lows, something like this, maybe on our lower time frame, then leading back into the break above the ascending trend line, then as soon as price comes above the ascending trend line, we are back within the buyer's territory where we can now feel comfortable to join a buying opportunities. And then let's see if price will break out the structure, then we can actually add more positions to our existing trade to maximize the potential of that bullish move. So that is how I will feel I can build up a confident idea to consider buying the GBPUSD at this point. But for now, we maintain a bearish bias. Let's see how the market will react. And trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you update as at when due. So this is my simple view on the GBPUSD. So I do encourage us all to mark out these levels on our chart, as we will be needing them as a reference guide to navigate the next phase of price action for today's trading session. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds as usual to see if there are any questions before we run through into the last asset on our watch list for today. So I can see some couple of comments here. Eric Mudavadi, good morning to you. I always love calling that name, the Mudavadi part. I'm not sure if I'm pronouncing it correctly. Please let me know if I'm pronouncing it correctly. Glad to have you around with us. Very, very fine this morning. Very blessed, and trust you are doing very well too over there. Then Jonah Aruna, good morning to you. Glad to have you around with us this morning. I can see a comment here from Kelechi. I love your analysis on fundamentals and how you All right, I'll take that as a compliment. Thank you very much, Kelechi. Thomas Baladon, good morning to you. Glad to have you around with us this morning as well. So, with that being said, and in the absence of no further questions at this point, I would like to take this as a confirmation that we are all on the same page, and I do hope we've marked out these levels on our chart. So, with that being said, let's move into the final asset on our watch list for today. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. And in fact, we are in quite an interesting situation right now. A sell position which was triggered a couple of hours ago as is running in a loss right now, which doesn't still mean that the bearish outlook at this juncture has been negated yet. We still need to exercise some patience and continue to monitor how price action will be trading around that trend line and that zone we identified this morning at the 1,983 and the 1,976 level to navigate the next phase of price trajectory for today. Now, as gold prices continue to face selling pressure at this juncture, the breach of the 1,976 for me was a beautiful signal that breaking down the lowest point price action has been for this week would be a beautiful opportunity to join a decline to the downside. And of course, let's see how this is going to play out. I just hope that price action will continue to the downside. Maybe this may be a retracement to join that momentum, but if it doesn't, we are always on standby to capitalize on the next move. Now, one thing I want us to consider here is that price action since the New York session yesterday has been confined within a range right now, which of course we shouldn't be surprised by this development, as we do know that the anticipation of the Fed interest rate decision has a tendency of influencing how market participants will be reacting to price action. Now, for me, this is a sign that the major key players in the market are willing to step aside and wait for these events to happen before making any informed or aggressive bet in a particular direction. And it's understandable that price could continue to persist within a range for a while before that next big move will happen. Now, another thing that could be affecting this is the affecting funds being moved from currency assets into safe haven assets could be supported by the geopolitical uncertainties in the Middle East, which could serve as a counterbalance for the strength of the US dollar at this particular point in time. Now, another thing is that could be supporting the ascent of the XAUUSD is the new optimism in the last 24-36 hours about additional stimulus measures happening in the Chinese economy to save the economy from going into depression at this point in time, which is something positive for the gold. If this is going to be the case, we might likely be seeing the price of gold rise today. Now, today we are looking forward to the US PPI data. We're also looking forward to the interest rate decision, which is definitely going to be having a significant impact on this particular asset. Now, the question is at this juncture is how do we intend to capitalize on the next move by trying to see how market participants will be preparing for these events today. Now, before I go into that details, and for the sake of those of us who are not part of the earlier session, let's run through how the week started for us all and what led to the situations we have at this point. Now, if you look at the structure closely, at the beginning of the week, we had our key level situated at the 2000 psychological mark area, which we said we will be using as a yardstick to guide our trading decisions for this week. Now, for those of us who have been with me for a while now, you know how we use our key levels in this community. As long as price action remains below the key level, we continue to look out for patterns and structures that supports the idea of selling that asset. Now, for those of you who had missed my weekend videos on the XAUUSD and are willing to understand how we came about this key level, I do encourage you to watch those videos to have a background knowledge of what we are talking about here. And if you in any way missed it, you can check the description box of this current video you are watching. I have all the links right there for you to refer you to all of these videos. So with that being said, we saw at the beginning of the week how price action was trading around the key level. It was more of around the key level, not moving far away from that key level, further emphasizing the importance of this particular zone. And as a result of the nature of price movement at the beginning of the week, we saw price confined within the $2,007.50 level and the 1,995 area. Now, something interesting began to happen about 4 to 5 hours into our Forex Morning Mastery session on Monday, as we saw price action was more or less stayed below the key level at the $2,000 area. Now, when the buy pressure resumed around this area, we saw that as soon as it got into the key level, we saw a couple of retests of that structure, which further emphasized that sellers may likely be dictating the pace, at least for the first half of the week. Now, with the breakdown of the support line of that range, I did mention that I had a sell position triggered prior to the live session, and I did mention that if price comes back to retest, we do want to be joining a decline to the downside. So we had a sell position triggered, and then we had this new structure after noticing persistent buy pressure around that area, and we did agree that if price action continues to break down that structure, we will be adding more sell positions to our existing trade. So as at the first half of the week, we were able to scoop in about 150 pips from two positions before the bullish momentum came in and take us out of that position. Now, after that, we had some couple of other developments in the market. That is, in the last 48 hours, price action has been a little bit choppy. Some of us did have some buy positions yesterday, which was triggered and immediately went into a loss, but it's okay. We are still on the positive side of our portfolio right now. Now, going into today's trading session, how do we intend to position ourselves for the next move? Well, the first thing I was able to do this morning was to acknowledge the fact that price action has been on a strong bearish momentum since the beginning of this week, despite all factors that support a momentum to the upside. Remember, we had we had this belief across the market that the Federal Reserve is finally going to be rounding off on their monetary tightening policies, where the expectation of a rate cut by the first quarter of next year was becoming very dominant in the market space. But now, with the latest development and from what the CPI data says yesterday, it shows that the inflation in the US is still very sticky, and that could probably incite some decisive decisions from the Federal Reserve right now, which we do not know what is going to be happening today. So everyone is going to be at the edge of their seats as we look forward to what the Federal's interest rate decision is going to be like, especially after a CPI data that came in yesterday with a 0.1% increase from what the previous month gave us. So in that regard, we're at a very critical juncture, but we have structures which we will be using to guide our decisions. So now we have a descending trend line here, which I spotted this morning after connecting the series of lower highs here. Now, you know how we use our descending trend lines in this community. As long as price action remains around or below the descending trend line, we shall feel comfortable in a sell position and continue to look out for patterns and structures that supports the idea of selling. However, if at any point in time this descending trend line is breached or broken to the upside, then this could trigger the potentials of buying opportunities here. Now, in addition to that descending trend line, we have a range to work with for today, which is situated between a is it a $13 range, a $12 range, that is between the $1,983 and the $1,976 area, which is just right around that descending trend line. And you know how we do it in this community, especially when we have a range like this. We usually exercise patience and wait for either the breakout of the range to give us an opportunity to buy. And in fact, if price action breaks out of that range, price action will already be above the descending trend line, which will be a beautiful sign that the descending trend line may no longer have the capacity to continue to negate the bullish attempt, hereby welcoming beautiful opportunities to be part of an uptrend situation. And don't forget that we do have multiple levels that we will be using to maximize the potential of that bullish move. So we have the $1,991.50 level, we have the $2,000 mark, and we've also the highest point for this week, which is at the $2,007.50 level. So these are the areas we will be looking out to add more buy positions to our existing trade. That is if price breaks out of the resistance line of that range. But as it is right now, like I said earlier, we are still in a sell position, which is currently running in a loss of about 47 pips right now, and stop losses is just right around above the 1,983. So let's see how this is going to play out, if price action will still continue to the downside. Now, for those of us who are yet to be in a sell position, well, you can have your sell stop order just right below the $1,976 level. As you will see, price has already broken down the 1,976, and this may likely be a retracement of that breakdown to now incite a downtrend continuation. So for me, I'm going to be adding another sell stop order below the structure to see if we can maximize the bearish momentum, if that is where price action has decided to go for today's trading session. So we are basically within a range which will be our center of focus for today, and that is between the 1,983 and the $1,976 level. So I do encourage us all to mark out these levels on our chart and include the descending trend line as well. This is going to be playing a major role in guiding our independent trading decisions for today's trading session. So this is my simple view on the XAUUSD for today. I do hope I made myself very, very clear. But if you feel that's an aspect you really want me to shed more light on, feel free to let me know in the comment section. And that reminds me, if you have found this session and content helpful in making your independent trading decisions for today's trading sessions, I really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps this channel to grow by exposing this video to a wider audience of traders who may find this content beneficial to them too. Thank you in advance for doing so, and for those of you who had already clicked on the like button, thank you very, very much, and thank you for the support so far. Now, I dropped the link to the XAUUSD live window right in the comment box below, pinned at the top. You want to be clicking on that link and click on the notify me button so we can be so you can be notified when we come on live for the XAUUSD live window. Unfortunately, yesterday we were not able to stream the XAUUSD live due to some technical issues, which I did mention in the live stream comment section yesterday. It was so unfortunate. I thought we will be able to make it, but everything we tried wasn't possible. But thank goodness things are sorted out right now, and we should be able to run the session today as usual. So I look forward to seeing you guys right in that in the comment section of the XAUUSD live window. And for those of you who don't know what the XAUUSD live window is, probably you are joining us for the first time. Well, the XAUUSD live window was a platform born out of popular demand from members of this community, where we do come together on a daily basis during the New York session to monitor real-time price action on the XAUUSD chart. So you come to see how we be on standby to capitalize on next move, how we manage our positions, and it's a session you do not want to be missing out of. So I look forward to seeing you guys right there. So on this note, I will be rounding off as we do not have any questions. Okay, I can see some couple of comments right here. Let me see. So I can see following the lives. All right. Thank you very much, Torres Master. I really appreciate your concerns. I think we've been getting some likes. Thank you very much as you guys do so. I really do appreciate your support as well. Kelechi, you are very much welcome, and I'm very glad you found the session helpful. I hope you clicked on the like button too as well. So on this note, I would like to call it a day. It has been a wonderful moment with you guys as we were able to run through our 3 assets, which is on our watch list for this week, and these are the USOILSPOT, the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And on all of these assets, we were able to identify simple trading setups using fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today, and of course position ourselves in such a way that we can capitalize on the next move for today. So I wish us all the best of luck for today's trading session. And for those of you who are joining us for the first time, I'm really glad that you stayed tuned into the end of the session, and I do hope you found this session useful in one way or the other. If you did, you do want to be part of our subsequent editions, and trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions for today. My last advice, which I usually mention, is that so we make a decision in the financial, whatever decision we make in the financial market is more or less an educated guess. The earlier you understand this, the better for you. And not until price action hits your TP target do you know that you are actually right on that particular trade. And in that regard, you do want to be having a well-defined risk management strategy that you want to be using consistently through all your trades from your account, as this will help you to manage your portfolio very well and be able to live to trade another day. So on this note, I wish us all the best of luck today and hope to see you all in the comment section of both my trading view Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.